And there you have it. The markets are officially closed on this Wednesday, November 27th. Welcome, investors and traders. I'm AJ Monte. And today, again, being Wednesday in the shortened trading week, will be the weekly market report. There will not be a report going out on Friday unless there is some type of economic news that comes out of Black Friday. I most likely will not be putting a video out and giving every one of our traders a long break from the market to be able to spend time with their family, and hopefully you'll do the same for this Thanksgiving holiday. This is a 3-month daily candle chart of DIA, which is the Dow Jones Industrial Average ETF. And if you recall from last week's report, I said we would most likely go higher Monday and Tuesday and then start to pull back with a downside target of 437.55. You could see we did just that. Not only did we hit the upside target, but we gapped up on Monday, and now that open gap combined with this open gap down here is most likely going to act as a price magnet. And so I do believe that that downside target will hit. Might take into next week for that to happen, but 437.55 is my downside target. You'll see that these diagonal lines that I have here, these were 2 diagonal lines in succession. Those are the price targets that I put out. So whenever you see a chart of mine being recorded or published on Zero Hedge or any other news agency, you'll know what those mean. All right, so IWM, you could see here, these were downside targets and upside targets that hit back here. You can see we hit the upside target, then we had a downside target hit. Here was an upside target, then downside target. Here's an open gap highlighted, downside target hit, upside target hit, downside target eventually to be hit. Now that downside target on IWM is 233.20. Now I'm just going to quickly hop to the weekly chart so you can see what we have here. Friday being a half a day trading, only a few hours of trading, chances are that candle right there is not going to change from what it is, which is a shooting star. Shooting star candles are long shadows on top with small bodies underneath. Those tend to be bearish, and you can see that in almost every one of these pivot points, the prices went lower after those shooting stars showed up. So my target down here doesn't look like much when you put it on a weekly chart, and it really isn't. But when you go to the daily chart, it looks like it's a much further target below the market. So downside target still open at 233.20 for IWM. Moving on to the Qs, you can see here that I still have my downside target in place at 492.79. Today, as I magnify this, that is a pivot, a downside pivot. What is the candle from yesterday? Well, when you have a lower high and a higher low, that is a half signal. This is also a half signal back here when you have a higher high and a lower low. Both of these are considered to be half of a pivot, hence the reason why they call it a half signal. However, today we have a lower high and a much lower low. So there's your pivot. And as a result of that price pivot, you can see down below what's happened. Again, as I magnify that CCI, that has forced the CCI to cross below the black line, which is the zero line, aka the momentum line. That generally means that the market will continue for the next 2 to 4 days in the direction of the cross, which in this case is a downside cross. So again, I'm keeping that downside target on the Qs in place right there at 492.79. There's still an open gap down here. Again, one that will act as a price magnet. That's why I have that target where it is right there, because it matches very closely to that gap fill. 80% of the time gaps fill. Then what happens after they fill? Well, 80% of the time after they fill, prices reverse. And we're seeing that exact thing happen. On Monday, this gap filled, and now we're seeing the pivot lower, or the reversal from the gap fill point. If you stick around with my videos long enough, you'll get this education a little bit at a time, like a weekly technical analysis vitamin, as I said last week. So make sure you subscribe, hit the like button, comment, do all those great things, and we'll be around a lot longer. Our channel is growing quite nicely. We're about to hit the 12,000 subscriber mark. And while that may seem like a small number compared to some of these, major social media influencers, that is a fairly good rate of growth for a technical analysis video that is more or less in line with the market. And so I have all of you to thank for that. And this Thanksgiving Day, I have a lot to be thankful for. And one of those things I am truly thankful for is your interest in these videos, because you are definitely helping us, but you're also helping a lot of people that are looking to learn how to trade these markets. So that is for the Qs. Moving on to SPY, you'll see that we do have, again, a pivot. There it is, lower high, lower low. Downside target on SPY is still at 581.22. Down below, we have a sell signal on the CCI with that full-fledged pivot and a gap below the market. Again, that gap will most likely fill, just like 80% of all the other gaps that have formed in the past. All right, now I'm moving to the VIX because there's some interesting things happening here with the VIX. As I mentioned, 100% of the gaps on the VIX fill. Why is that when 80% of the equity gaps fill? Because the VIX is not an equity, it's not a stock, it's an oscillating index. So we did have a downside gap that did fill yesterday, and this candle right here is an inverted hammer. An inverted hammer is very much related to a typical hammer. There's a hammer. This is inverted hammer. When you see these forming at the end of downward legs, those are bullish. Those are some of my most favorite signals to follow. The bullish candles are hammers, bullish haramis, bullish engulfings. You'll see those hammers, inverted hammers and such. The bearish signals are going to be bearish engulfing and bearish haramis. That's a bearish harami. Here's a bearish harami. You see that? Here's a bullish engulfing. See that? And as you can see, when you have these bearish candles show up, the large majority of the time prices move in the direction of where they're indicating. So this is an inverted hammer where 80% of the time the price will move higher from there. And I still have my guarantee in place for this gap to fill. Again, 100% of the gaps on the VIX fill. Therefore, if we are betting on a bullish VIX, then that is inversely related to the market. So we're expecting the market to pull back. A lot of our members got long the VIX through, well, I can't give you the ticker symbol because they pay for that information, but I can tell you this. If the VIX goes up, our members are going to make money, and I'll get to more of that in a moment. Now, I want to mention a couple of things. If you have been following along with my market reports, you'll know that I follow the 7-point trading checklist. As I just mentioned, I look for candle types, right? Bullish haramis, engulfings, and hammers, inverted hammers and such. And if it's bullish, I basically put the check mark on the bullish column. The volume is a leading indicator. If it's dropping on the way down, it's bullish. If it's dropping on the way up, it's bearish. I often talk about the 20-period moving average and the price divergence from that moving average. As I just mentioned, I talk about gaps. I look at the stochastics. I look at my most favorite oscillating index, which is the commodity channel index. And a lot of times you'll hear me talk about role reversal. Role reversal is when support, once broken, turns to resistance. And when resistance is broken, it reverts back to support. And so that is something to follow. Again, each and every week, I try to throw some educational content into the mix. Last week, again, I talked about MSTR, how they had $30 billion worth of Bitcoin. And what happened this week? Bitcoin took a downturn from its $100,000 target and dropped 10% from the highs. And that's putting MSTR, or MicroStrategy Inc., into some hot water here because they are a leveraged company. Not only do they own all this Bitcoin and they continue to raise money to buy more Bitcoin, but they're $4 billion in debt and they haven't been able to show any profits. So I showed you this chart, and then On Tuesday morning, I put out the continued free service through Zero Hedge. I put out the quick chart, which you can take advantage of. For those who are subscribed to this channel and hit the notification bell, you're going to get this video delivered to you 15 minutes before it's published on Zero Hedge. Connect the dots there. If you get ahead of the crowd, you obviously have an advantage. And so what happened is those who traded against this little video that was about 3 minutes long, you made some money. Look at the weekly chart on MSTR, and I'll show you what's happened. It's pulled back from this high. It opened right here this week on the high, traded down, and look at this volume. Now, again, we have a shortened trading week. We only have a half a day on Friday, so that volume will most likely stay lower. But look at the sell signal on the stochastic. Look at the pivot on the CCI as it's heading towards that red line, which once it crosses will be a sell signal. And the week before last, our traders and those who traded against the NVIDIA quick chart are doing tremendously well. Because remember, last week we had that shooting star right there, which is bearish. We already have the sell signal on NVIDIA right there and a sell signal on the CCI. So our members, particularly our VIP members, are making a killing in these two stocks. And so stay tuned next week. I can't give you the ticker symbol yet, but I will be putting out another quick chart Tuesday morning. And again, if you hit the notification bell right there at the top of the page on our YouTube channel, you will be notified when that video comes out before the market opens. And if you're a quick enough trader, you'll be able to position yourself ahead of the crowd. That's just the way it is. I want to thank each and every one of you again for subscribing and liking our content. Please continue to comment and share the video with people you know. As I just mentioned, we have a lot to be thankful for. We live in the greatest country in the world. We have opportunities abound. And we are very, very lucky, again, to be able to make money from a market. Think about this, not just in investing, but trading the markets. The markets will be around long after I'm gone, and you can count on these opportunities once you learn how to read the charts. You put the odds in your favor, and you learn how to trade the signals, and you could turn this market into an income stream for you and your family. I'm not giving you any guarantees, but if you follow along, you'll see our percentage of accuracy is the best in the world. And we continue to put out the greatest content that I believe we can put out. And if you like it, again, share it and please comment. We love your comments. So with that, I'm going to wish you a very good long weekend. Hopefully you'll take a break from the markets, spend good quality time with your family, and I will talk to you next week. So long.